Hello, Bright Buffalo Niagara friends. For our entrepreneurs who are listening, a number of regional investors have come together to create and deliver specific tips to help you better prepare for the forum. My name is T Dunstan. I'm a serial entrepreneur, and I'm going to discuss the importance of preparing an investment-grade business plan. One of the key things is to really understand your cash flow forecast. You want to start with your income statement. You want to understand the margins associated with your product. The more granular you can be, the better. You want to not just suggest percentage growth, but explain where that growth is going to come from, what channel, what customers, where are you going to start. And once you really have your income statement nailed, and by nailed I mean that you want to be able to present and explain every facet of it and have benchmarks. So there's other companies in the industry that you want to pursue that you can look to for reasonable margins. You want to avoid a hockey stick presentation where you're going to come out of the blocks and grow at a fantastic rate. It always takes longer and costs more money for a startup. So in fact, you want to have a range of projections. So you could have likely, best case, worst case. Once you have your income statement and you're very comfortable with it, then you want to turn to your balance sheet. And you want to have all facets of your balance sheet, including your capital structure. So starting on the asset side, you're going to want to know how many days sales of receivables are you going to have. You can factor in that ratio. What is your inventory going to look like? What are your development costs that you might capitalize be? And you have everything that might be capitalized on your balance sheet, going right down through the current assets into plant and equipment, computer systems, and really have a good understanding of that. Then on the liability side, you have to understand how much you need to raise in terms of initial equity and then also your debt structure. There's some rules of thumb in that your receivables can usually be financed, 80% of them by banks, inventory about 50%. You might be able to factor your receivables initially. Recognize that angel financing is usually going to be convertible debt, and they're usually going to seek a 20% discount at the first valuation. To the extent that you can rely on friends and family and bootstrap, that's a wonderful situation. Okay, so we've talked about the income statement, we've talked about the balance sheet, now you have to have the cash flow. You have to, which ties together the movements in the balance sheet. And you really have to have that understood, and because that's one of the key things that entrepreneurs don't realize is the overall consumption of cash from all facets. It's not just the income statement, initial loss that you have to fund the working capital and any startups associated with your manufacturing. So the thing is to really have that nailed, have it reviewed by a professional. There's a lot of people in our entrepreneurial ecosystem that are willing to help in terms of our business schools, in terms of our Center of Excellence, and I wish you great luck. And I invite you to stay tuned because we're going to have a lot of other great tips and suggestions. And visit our Bright Buffalo Niagara Facebook page and also our website, which is brightbuffaloniagara.com. And don't forget to tune in next week for another tip. Thanks and good luck.